Hello, everyone, and welcome back. And what a call made here on this channel back in November, right here. Veeva Systems is trading in a range 160s, 170s level. The forecast was done right there, and what a move it made. In just around 3 months, a 42% return. So another great call right here on this channel. Right here, as you can see, in November, it was trading at around the 160s, 170s level, and what a move it made, 42% in just a few months. That is a phenomenal return for such a great business, such a great business with great financials. So if you used options and you set your targets, trailing stops, you could have had a really nice return here in a short period of time, especially for a company like this. However, look what's happened. Very interesting. This stock came crashing down once again. The stock has a tendency to do that, especially during earnings. And it's just trading around the same range as we speak. Very interesting. Now, I say very interesting because look at this level of support. It comes crashing down, but doesn't get to the support level. Here, it didn't get there. Here, it didn't get there. Here, it didn't get there. The last time it was at this level, it's way back in 2020. Okay. So this is like a skyscraper of a foundation of support, especially for a company with such strong financials. Now, what happened here? Well, on the surface, nothing. It's a great business. The fundamentals of the business are the same. It had blowout earnings, blowout revenue, blowout cash flow, really strong in all facets of its financial statement, of its balance sheet. So what could have caused this? Well, once again, it's guidance. Here it was guidance, and here it's guidance. So what does that mean? This is a good buying opportunity. Consider taking a position once again in the 160s level, either using put options. You can sell puts below the price. This way, you don't have to be concerned that you might miss out on the move. But just weeks after I did the forecast back in November, it actually got into the 160s. As I said, would be a place to consider to enter the market. And there you had your 42% move. Here it's down again. So let's just take a look at the financial, see if anything has changed here. What could cause such a big move? 14% down shortly after earnings. That's a big move for a company of this size and with the financials that it has. So is there a problem here? Something to be concerned about? Let's take a look. Wow. Just take a look at this balance sheet. Nothing's changed. Revenue explosive on the way up, consistently going up year over year. Net income going up year over year. The EBITDA, this really gives you an idea of the financial strength of the company. And as you can see, the year over year consistently going up over time. Look at that cash. This company is very cash rich. And look at the debt, it's hardly anything. Look at the cash to debt ratio. Unbelievable. I mean, this may be in the top 1% of all publicly listed traded companies in the world in terms of its financial strength, its growth. Look at the operating cash flow. Look at the free cash flow. They beat on that too. Look at the net income. This is a great, great business. So why down 14%? Well, once again, guidance. They actually are conservative with guidance, and the guidance basically did not meet expectations. At around 1%, it was around 1% over expectations in terms of guidance. Imagine that. So it has a blowout quarter and it's guidance, and that's why it crashed last time. That's why it crashed this time. So where to get in? Same thing. Now it's up strong today. However, it's good to be patient. I would say in the 160s range. I mean, just look at this level of support, really strong. Now, could it break through its level of support? Sure, it can. But here's the point here. It's a great business. It's not like you're buying a meme stock and you got yourself a 42% return. That's pretty good. Even for a meme stock, 42% return in just a few months is pretty good. Okay. But this is such a great business. So that's like a stop loss order. With a meme stock, you have to worry about it going bankrupt. A 42% return is not worth the risk of you losing all your money. That doesn't happen here. This is a great business. So you could sleep at night knowing that you know in the short and long term that this company could go up, right? So if it breaks through the support, so what? You own one of the best businesses in the world, according to its financials, according to its financial strength. But however, it is a very strong level of support. It keeps hitting this area and it keeps bouncing up. I mean, these are big returns, big returns. These are all nice returns that you could make here. So you can either possibly get in at a level on the 160 if it comes back down, which it did back over here, or you could use put options if you don't think it will get there and still earn some nice money. The IV is pretty high. The options are still overvalued based on the strong move downwards, so you can get some nice premium out of it. Now, the other reason why this came down is because stocks go down in harmony. Okay, look at Salesforce. It's down a lot more than this company. That's a larger business. It's a down component, great business. It was down even more. Nothing much has really changed with Salesforce. Fundamentals of the business are intact. Microsoft was down. Adobe was down. These are software companies. That's the way it works. When people sell, they run for the exits and they sell just about everything, especially within a sector. The software industry is not a popular sector right now. That's another reason why. Remember 2022. Look at the tech meltdown. A lot of these companies are great businesses. The earnings haven't really changed, but just about all of them were going down, and they had big declines in 2022. The tech sector led the declines during that year. It's the same thing here. So this is a good opportunity to pick up a great business at a low price and get a nice return. So there you have it. Veeva Systems, something to consider here. An entry point around this level. I would like to know your thoughts. Feel free to leave comments. Please subscribe. Please like up this video, and thank you for tuning in.